Hey, this is Jack from Alpha Charts with a state of the market video. Today is October 8th, 2022. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned near your time frame and risk tolerance. All right, so what a wild week, huh? I mean, on the week, the market was up 1.51%, but really that doesn't tell the whole story because, coming into the week, we had, European banks and Credit Suisse about to, implode, and then they weren't. And so you had this really sharp rally up on decent volume, got people really switched to a bullish mindset. I felt like they did. And then boom, the market just literally fell apart. You had this outside day right here and just literally fell apart and came back down almost back to the lows. We're in a bear market. That's what this is saying, right? We're living underneath the 200-day moving average. We're living underneath the 50-day moving average, and we're in a downtrend, right? Lower highs, lower lows. Not much else to say about that. So on the week, this was down up 1.51%. Let's look at what RSP was up or down. 2.25. So that's kind of nice to see that at least the equal weighted outperformed the cap weighted, right? We like to see that. Here's RSP on the daily. Again, didn't quite make it down as far, but still not a good look, right? I mean, as if that's a silver lining we have, that's not saying much, right? But yeah, underneath this area, right in this area, any further weakness, and I think it's very likely that we're going to come down into this general area. If I move that up just a little bit right there, roughly another 10%, 10, 11%, whatever. Very possible moves to the downside. Looking at the Qs, I talked about this kind of widening pattern that I had identified here. And again, going on the weekly, it was a 0.69 on the week. So very, volatile weeks to say the least. And again, you see not much on the accumulation side at all for the week. This trend line is still in force. Going back to 2010, right? There's your trend line from 2010. Still in force. Good chance that we are going to come back and touch that trend line, or even maybe this horizontal potential support area. Below that, it gets kind of dicey. But let's just go with the next potential area. I mean, any further weakness, and again, there's your 10%, and there's your 11 or 12%, right? So that kind of lines up with S&P as far as levels go. It's kind of nice to see that they kind of line up as far as next leg down if it continues. Hasn't broken this pattern, and maybe we do see a little bounce next week. I don't know, but I think if we close below this area, which is likely, we're gonna have some further weakness. Looking at the equal weights were up 1.56. So once again, those mega caps really took on the chin that week. This is what this is telling me, right? Because even though this was not a pretty week, it was stronger than the cap weighted. So yeah. And going back, that's an ugly chart right there. That's better. Looking here. So this support area is 22%, but listen, it doesn't have to go all the way down there, right? That's just one potential area. It could potentially go here. That's a 15% move, right? And that probably would be where I would say it's likely to at least find maybe some support. So let's just draw that in here too, because this is probably the next potential stop right there. Another 15%. I mean, that's a lot. So just be careful. If this really starts to break down, which it looks like it wants to, it's a problem. I mean, looking at IWM, let's just zoom into the daily here for a second. I mean, another toppy looking pattern. To me, this looks like a top. Whether you want to call it a head and shoulders or whatever you want to call it, it doesn't really matter, right? Heck, if I inverted this chart, it looked like a nice little cup and handle probably. Um, the point is it's a toppy pattern. It doesn't look like a bottom. This is not what bottoms look like, right? It's what tops look like. And so, break of 163, right? Break of 163, and things are going to get really nasty in small cap land. And just wondering, let's just see what that is. 18% move there. And oh, look, it's about a measured move or so, right? Yeah, so it's about a measured move. So that's, another, 18 to 20% in small cap land. That would be pretty rough, right? And again, it doesn't have to get all the way down there. Maybe it stops a little bit shy of where I drew my line in, because the market doesn't care where I'm drawing my support and resistance in. But I think 18%, that's very possible. Again, in small caps, sure, that'd be a risk off scenario big time, right? Because that's what we're at. We're still in a risk off scenario. Looking at IWO, again, a very similar look to the IWM as expected, the small cap growth. And again, I had drawn this in weeks ago as possible scenario, bounce here. And if it breaks this area, I think, it's got much lower to go. There you go. Another 18 to 20%, right? Same as the small caps, basically. Yeah, 20% there, 20% there. That's a measured move if this toppy pattern, whatever you want to call it, plays out, right? Again, it's a very significant area down here, right? This would be the next major area. The areas that it could bounce, is it going to go straight down? Probably won't go straight down unless something catastrophic in the world happens, but that's a likely target. And again, I've drawn this in a long time ago, a few weeks ago at least, and it looks like so far it's starting to play out. Just not a good situation. And it was even though we were up 2% on the week, you see these wicks up here on the weekly, just not a good look. All right. So let's now delve into, let's do mid caps too. Because mid caps actually held up a little bit better than the rest, if I remember right. Yeah, 2.86. So still got that gigantic wick. And I mean, still not holding up great, but it's mid caps are holding up better than the rest. That's just what's happening. The other ones are, it's only about 12% to the next major area of support. And from top to bottom, let's see what this is. And it's retraced about 25%. Okay. So mid cap's holding up a little bit better. Let's look at the indexes, because XLF has my attention, and we've talked about XLF and what's going on in this one and why it's so important, right? So here we go. Recap 2007, 2018, 2020. Let's go to current day. And like $30 is what has to hold, and we're at $30.89. We break $30, and that's not good. That's terrible, right? Again, if I inverted this chart, right, and let's just do it real fast because that's fun, right? Like, who here would be saying, "Oh, XLF has a beautiful cup and handle," right? This is XLF inverted. All right, like we would be loving this. We'd be buying the breakout, in XLF all day long if it got above 30, right? So what does that tell us? Shorting or selling financials under 30 makes a lot of sense. But as an indicator, it looks terrible. Absolutely terrible. SMH, right? Semiconductors, super important. And it is, again, breaking down. We had the again, a really small broadening pattern right here, with this outside day. Just looks ugly. Chances are it's moving down to the next level as well. 20%, right? That's what we're looking at. 20% decline. AMD had a warning, the earnings warning coming up. really hit the sector hard because I would expect they're all going to have problems. Nvidia, Intel, everybody, Micron, whoever you like in the sector. So that being said, gotta be careful. If SMH is breaking down, that's a bad sign. Okay, again, looks more toppy. It does not look bottomy to me at all right now. Let's look at transports, right? What are transports doing? Again, we drew this in. Transports broke down first, right? I think it was from FedEx a while back, right? This is equal weighted, so it kind of takes that, but FedEx would have an effect on the entire sector, obviously. But let's zoom in. Again, we draw these arrows in. What was likely to happen? This was going to come back into this resistance, find issues, and then potentially come back down. And that's what we're starting to see now. Starting to come back down. Again, is it going to go straight down? Probably not. But, this, again, transports breaking down underneath all moving averages, hitting resistance. Not a good look. Let's look at housing. Housing still looks pretty rough, right? This is and let's go back to the weekly. Why is this area so important? This was, let me make it a little bit bigger. This was, 2006, right? 2006, the highs when this ETF first came on the market. Then here we go, 2018, 2020, right? Big important area on the weekly. Well, here we are. And where's it going? Oh, look, 20% lower, right? Are we seeing a theme here? I think the market is primed for another 20% move to the downside. Heck, from the top, if it did, it's 50% retracement. That's a big deal. If the market retraces 50, that's a major bear market, right? That we're in. So if you're navigating this pretty well and you're saving your capital, congratulations, right? Because you're now, navigating a major bear market, which isn't over yet. I still believe that are we closer to the end than the beginning? I do believe that, but there's still another 20% potentially to the bottom. So maybe, and we don't even know if that will be the bottom. Anyway, let's look at the internals. Get rid of that and get rid of all these indicators and just look at what we want to look at. Beautiful. And let's look at VIX. All right, so what do we see in the VIX? Still elevated, at 31.35. Now it's elevated, but it's not capitulation, right? It's just elevated. It's got to get at least to 38 to 40, 37, 38, 40, somewhere around there. And it's not there, right? So down is likely, more volatility is likely, I should say. Credit spreads, right? Are they getting blown out? Let's find out. So they came in a little bit this week. Again, maybe just made another higher low, right? We're seeing this higher highs, and now there's a higher low. We don't know if we have a higher high or if this will be a lower low, but we do have higher highs here. So they're not getting blown out. So I believe at the end we're going to see a move more similar to this, and this is too organized right now. We're not seeing credit spreads blown out. Again, I think that even though they are elevated comparatively, likely scenario is that we again have lower to go. Put call ratio, right? Everyone's bearish. Nope. Like people started to get kind of bullish, right? Now they're even, so close to 1, right? So yeah, we have not seen that capitulatory move that marks the bottom. Again, for good reason. There's no signs that we're at a bottom, right? Like nothing here. Let's look at percent stocks above the 50-day moving average, right? Well, what did? We were able to reset it some this week to have more down to go, right? Get it just reset just enough so we can now have the market go down further and not have a capitulatory type move that likes to mark bottoms, right? And so we don't have that anywhere. Looking at Bitcoin, because I do like to look at Bitcoin still. Yeah, I mean, it's been going sideways, but again, is this a bottom or a top? Hard to tell, but potential move to this, 13,000 area is another 35% lower. So again, Bitcoin not leading the market out of this, not looking great. All right, so putting it all together, let's go back to the cues. Good chance we still have further to go down. I would definitely be very, very cautious in this market. Know where your stops are if you have positions. If we do come to this area, it's a 42% on the SPX, top to, actually, I don't have any marks on this one, but let's just pretend like I do, and it comes back to here. That's only 30%, right? That'd be better. Either way, it is a major bear market, and be cautious because it's not over yet. There's no signs that this bear market is over yet. There's actually signs that it's going to go lower right now, right? So we have to be very, very careful with all of that. Okay. Hope you all have a good week. Stay safe out there, and we'll talk to you later. Stocks to watch tomorrow, just so y'all know. I'll do my stocks to watch tomorrow, and that's what we got. Take care. Bye.